What should the investor who has some room to move either between different asset classes or has some cash on the sidelines, what do you do?
What's next for markets?
We really are on the heels of extreme volatility.
Look at the big picture world and see what's playing out and try and place bets accordingly.
Hello and welcome to today's video. If you're an investor in the crypto market or have been thinking about investing, you don't want to miss this. In today's video, Raoul Pal, who's seen the market's ups and downs of the crypto market, has shared some valuable insights for investors. If you're wondering whether you should invest in Bitcoin or if now is a good time to invest, or whether you should wait for a market correction, then you're in the right place. Raoul Pal has shared his advice, including all of these questions. So sit back, relax, and let's dive into the world of crypto investing with Raoul Pal. And if you want more videos on crypto and the economy, be sure to hit that subscribe button and the bell icon to never miss any video. Are you ready? Let's jump right in.
I've been involved in this market since 2013 when I first saw Bitcoin. I wrote the first ever macroeconomic strategy paper and valuation for Bitcoin. So I've been all over this space. And the one thing when I wrote that first article is you need a 10-year time horizon. Everything else is done. And if you are worried about these cycles, you are trading it wrong. You're trading and not investing in the adoption of a network. Right. So how does crypto work? Crypto is driven by two things. It's really simple. Network adoption, which is Metcalfe's law. So that's the number of active users plus basically the number of connections or applications for those users. That is what drives the long-term trend. The log trend of Bitcoin over time is the best performing asset of all recorded history, and it remains so in every single up business cycle. There is no asset that's ever performed as well. But it is cyclical, driven by the money supply and the liquidity cycle.
And the emotions.
And that's what brings it down 70 or 80%. So everyone goes, what comes down 70, 80%? You've got to remember that if I'm just looking at the Bitcoin chart now, the low in 2015 was $200. Right. Then it went all the way up to $20,000, and then it corrected down to $2,800. All the lows are massively higher, and the highs are massively higher.
Yep.
So if you just step back and say, oh, I bought crypto and it fell, hold it. Your time horizon cannot be 3 years. Your time horizon needs to be long enough for the network adoption model to work. And the best way of doing that is just using a log chart and looking at it within that. And it's a very smooth uptrend. Right. And then what you do is you learn to use the down cycle, the liquidity cycle, to add to your investment over time, much like you would have done with Amazon, or you would have done with Google, or you would have done with Microsoft. They're very similar models.
If you're like most investors, you're probably glued to the screen, watching every up and down in the crypto market, checking prices every hour. But what if I told you that all of that noise is just a distraction from the bigger picture? Raoul Pal has been in the crypto game for years, and he knows a thing or two about riding out the ups and downs. His key lesson? Adopt a long-term perspective and don't let short-term volatility shake you up. It's easy to get caught up in the hype, but the truth is, crypto's potential lies in network adoption. That is what will drive the long-term trend, not the daily price fluctuations. And while crypto is cyclical, going through periods of expansion and contraction, these are just natural and inevitable. So take a step back and don't let the daily price movements distract you from the bigger picture. Crypto is not a get-rich-quick scheme, but a revolutionary technology that will change the world. And if you can adopt a long-term perspective, you'll be able to see crypto as a generational opportunity, not a short-term speculation.
The advantage set for baby boomers is they came of 30 years old, roughly, in the 70s. And what they got was real estate at very low valuations versus income. They had equities by 1980, equities at a P of 7. I mean, they got given a gift set and they've ridden it all the way. Now, they've taken a lot of leverage as well because their wages in real terms actually didn't go up as much as they'd hoped. So they took on a ton of leverage, but captured the gains. Their kids are the millennials. They're now the same age as their parents were, and the equity market's trading at a multiple of 3 times what they got. The real estate market is so expensive that these kids can never afford to own real estate. And interest rates are low. That their parents had interest rates at 18% when they started saving.
Yeah, even higher.
Yeah.
Crazy.
So what
Crazy
they've
mortgages.
got is a much lower probability of building the American dream. They're massive 401k passive investors. So they buy index funds, which is one of the things that screws up market valuations. They know that they need to take extra risk because 6% a year or 8% a year is just not going to cut it.
Right.
Because it's never going to buy them a house. So then on the other side is their immense risk takers, the YOLO mentality. And so they will take risks that baby boomers think are ridiculous, but they kind of are forced to take the risk because how else are they ever going to catch up? So it's a risk-seeking culture, which has driven entrepreneurship, startups, retail trading, cryptocurrency investments. All of these things are all coming out of this. And I don't think that's a bad thing. They've got lessons to learn. Everyone's got to learn when you invest, how to lose money, what's right, what's wrong. But the buy and hold mentality of something that compounds at 8% a year is just not going to get them to where they need to get to.
Right.
Not now.
There is a stark difference between the financial reality of baby boomers in the 1970s and millennials today. It's a tough pill to swallow, but the truth is that the American dream is becoming increasingly difficult to achieve for the younger generation. The baby boomers had it easy. They could buy houses and stocks for cheap, and even though their salaries didn't grow much, they made a fortune from these assets. But what about millennials today? Well, the reality is very different. Housing and stock prices are through the roof, making it impossible for young people to afford them. It's a tough world out there for the younger generation. They can't rely on just 6% or 8% annual returns to achieve their financial goals. They know they have to hustle harder and take more risks if they want to catch up. And that's where investing in crypto comes in. Yeah, you heard it right. Investing in crypto can be a great opportunity for young investors to build their portfolio in the long term. It may seem like a high-risk investment, but with the right strategy and knowledge, it can pay off in the end. Let us know your thoughts on this in the comment section below. Are you ready to take on the YOLO mindset and dive into the world of crypto investing? We'd love to hear your thoughts.
We have the ongoing debasement of the currency system by the central banks.
Right.
So that means our purchasing power of our income keeps going down versus the price of assets. But if you can buy assets, you'll probably do very well in this environment. But also, I'm a big believer in what I call the exponential age. And the exponential age is this nexus of all of these technologies all hitting network adoption models at the same time.
Right.
That's cryptocurrency, AI, robotics, longevity sciences, biotech, Internet of Things, self-driving car, all of these things, EV, green energy, all of these things are all hitting at the same time. Mankind has never gone through anything like this. This is the fastest pace of change.
Perfect.
And you can either shake your fist at the sky and say, stop changing, or you can embrace it. And to me, this is a renaissance. This is the Roaring Twenties is going to be fundamentally a shift than what we knew in the last 50 years.
As we wrap up today's video, we hope you gained some valuable insights into the world of crypto investing from Raoul Pal's experience. Remember, the world is changing faster than ever before, and we're all part of this amazing journey of the exponential age. Raoul Pal thinks this is a chance for a new resistance, a new Roaring Twenties that will be very different from the past 50 years. Investing in crypto with the right knowledge and strategy can be a game changer for your portfolio. Don't miss out on this opportunity to potentially benefit from the transformative power of blockchain technology and the crypto market. So, what are your thoughts on investing in the crypto market? Do you agree with Raoul Pal? Is it a good time to invest in Bitcoin and the crypto space? Let me know your thoughts in the comment section below. And of course, don't forget to subscribe to my channel for more updates on crypto and the economy. Also, be sure to give a big ol' thumbs up to this video. Thanks for watching, and we'll see you in the next one. Adios.